Hello and welcome to Livewire's Fund in Focus. My name is Chris Conway. Today I'm sitting down with Shawn Lese. Shawn is the Chief Investment Officer and Head of Funds Management for Nuveen Real Estate. And today he's going to be talking to us about the Nuveen Global Cities Private Real Estate Fund. Shawn, thanks for joining us for this Fund in Focus.
Hey, thank you for having me. It's a pleasure to be here.
Can you tell us a little bit about the fund and give us an introduction?
Sure. So the fund is really designed to deliver a diversified exposure to investors in real estate, right? And what we're really looking to do is pick those real estate sectors and the geographic exposure that's really best positioned to take advantage of a lot of structural and demographic megatrends that we're seeing out there in the market.
Shawn, what's unique about the way that you invest?
I think for Nuveen Real Estate. So we've been around for over 80 years investing in real estate. We've got $140 billion of assets under management globally. We've got over 800 people, 30 offices. So we're definitely a large organization. That's not always great, but I think the way that we use our size and our scale allows us to deliver outperformance for our clients. And so here's two ways, for example, that we do that. Number one, our size and our scale and our presence around the world in a number of cities makes us really a local investor. And so, a lot of times what you'll have somebody from, New York flying down to Dallas to go take a look at some assets. Well, we've got, 40 people on the ground in Dallas. Those people are local. Local real estate investors are generally going to be in a position to outperform, somebody else is just flying into those locations. So it's number one, we try to be as local as possible. Our size, our scale allows us to do that. But then the other thing is, another path to kind of outperformance is specialization in different real estate sectors. So, the reality is real estate as an asset class really shouldn't be thought of just real estate. Like, you really need to break it down to the individual subsectors. And right, we're talking about things like, multifamily housing, apartments, right, versus industrial, versus retail, versus offices, versus alternatives, that whole class, including self-storage and medical office buildings and senior living, right? A lot of these alternative types. And the drivers for each of these different sectors and the promise of performance or not, not performance, right, is going to depend on, they're going to be different for each of the sectors. And so what we do is our execution teams are broken up into sector specialists, and they're put on one of these teams. So we've got basically 6 teams. We have a team that does housing, a team that does offices, industrial, retail, alternatives, and then we have a 6th team that focuses only on debt. And as a result of that, the acquisitions, the financing, the asset management, the dispositions of the assets are all done by people who only focus on that one sector. They're not generalists. That specialization is a very strong source of outperformance for us. And so when we're making investment decisions, what we're really getting is we're having, local people making decisions about the individual sectors that they're absolute experts in. And we've been very successful with the performance as a result of this structure.
Yeah. Shawn, just to follow up there, if I may, I imagine a lot of that is relationship driven. So you talk about people on the ground that know other people, opens doors and opportunities that you wouldn't otherwise get to.
I'll give you a perfect example of why that's important is, probably about 2/3 of the deals that we do, in the fund have come off, and they're either off market or semi-off market, right? So those just never hit the broader market.
People don't see them, yeah.
No, what happens is basically, our guy on the ground over in LA gets a phone call about some, industrial deal that partner has just developed, and he needs to move it quick for, whatever number of reasons that's the case. And he's like, if you can hit this price, we're good. And, we'll do a full underwriting on it, but we may get something that may be able to buy it, 25 basis points cheaper than might have been the case if it had hit the market. So that's just one example of, why being local is important.
Shawn, the strategy has been around since 2017. It's been available for Australian investors since 2023. Can you just give us an example of some of the types of investments that the fund makes?
Yeah, absolutely. So we will be investing directly into private real estate, right? So we will buy actual physical buildings. We've bought historically a number of industrial properties, so very big exposure to industrial, very big exposure to medical office buildings, to multifamily, to retail. And in addition to that, what allows us to be kind of flexible is to figure out where there's a better risk-adjusted return and migrate among the different real estate asset classes. But we can also pivot a little bit geographically. And so, at the moment, the majority of the exposure is in the United States, but we also do have exposure throughout the APAC region and also in Europe. And then the other thing that we can do is kind of a little toggle switch is we can make direct equity investments, and that's what the fund will mostly hold. But there are periods of times when actually, on a risk-adjusted return basis, debt may be a better thing to do. And we can actually step into being a lender. And that's, during the course of, say, 2023, when we saw valuations still continuing to fall in real estate in general, and a very, very tight debt market because the banks had pulled back at that point. We stepped in and we were just lenders, and so we could underwrite deals and get 9s and 10% IRRs at a time where if we had invested that money into equities, we'd pay 100 for something, and maybe that would fall down to 98 or 95 and then 90, right? So that kind of flexibility is something that's pretty important for us. But generally what you're going to be getting is exposure to a diversified pool of direct real estate assets across sectors and geographies.
Sure, nothing is without risk, as we know. How do you manage them?
Okay, well, it depends which risk we're talking about here. So I'll pick a couple of the key highlights, I think, there. Number one is leverage, right? Core real estate should be leveraged. It's very efficiently leveraged at, kind of call it like 30 to 35% loan to value. But there are times when you are going through downturns and the market's a little more challenged when you want to reduce that leverage. And so, we take a very conservative approach to leverage. We were probably up at the peak level close to 30%. And then once interest rates started rising, we anticipated falling values. We basically took that leverage down to 14%. It was I think a very good move to protect a lot of value for our shareholders. But the other thing we do is just before we buy any property, we do a huge amount of due diligence on those properties. And we, the physical characteristics of the buildings are very important to take a look at. And you bring in engineers and make sure the buildings are sound. We need to understand from an environmental perspective, what the in-place environmental risks are. But we also want to understand on a go-forward basis, what are the sustainability aspects of the building and what kind of investments are we going to need to make to keep that building in a situation where there's never any kind of like brown discount associated with it. And then I would say, there's just the pure economics of real estate investing, which is what's the demand and supply dynamics that exist. So we'll always take a look at the supply situation in a given market. Like that was a super critical thing to take a look at, for example, in 2022 and 2023, when you had a huge amount of new deliveries of supply in the multifamily space, for example. And you just know there's going to be softness in rents, so let's stay away from that area. And if you want to buy multifamily, let's pick some other locations where maybe the rent prospects are going to be more robust, where there's less supply that's been hitting.
Yeah. Shawn, last one for today. What role can the fund play in an investor's portfolio?
What role can it play in a portfolio? Well, first of all, it's direct real estate, right? And direct real estate offers, quite a few benefits in a portfolio. First of all, income, right? So if the total target returns sort of an 8 to 10% over a cycle, you might hope to get about half of that in the form of income, so 5%-ish, maybe call it. But you've also got capital appreciation and the opportunity, and particularly at a time like now when we've just had a very significant valuation reset, that's typically followed by some pretty strong performance after that point. And so capital appreciation is up there. So you're getting a total return of sort of that 8 to 10%, which we think is pretty attractive. Real estate also serves as a great diversifier, right? So the correlation between a lot of the other asset classes is very low. And one I'll point out in particular, a lot of people are really surprised to hear of the correlation with publicly traded REITs, because you'll talk to investors and they say, oh no, I've got a lot of real estate exposure in my REITs portfolio here. Well, the reality is those REITs are incredibly highly volatile, and they trade much more closely to small cap stocks than they do to direct real estate. And so, by introducing private direct real estate, you're able to get diversified. Corollary to that too is much lower volatility than other asset classes as well. And so you're getting a good return, low volatility, so pretty solid risk-adjusted return. And the last one that needs to be mentioned is just the ability to capture inflationary adjusted. So as an inflation hedge, it's historically served as a very good vehicle to hedge inflation.
Shawn, thank you so much for sitting down with Livewire and taking us through the fund.
Oh, thank you very much. It's a pleasure to be here.
If you enjoyed that Fund in Focus, make sure to give it a like and don't forget to follow our YouTube channel. We're adding lots of great content every single week.